Hello, good day. In this session, we will review the classic chart patterns of trading signals. We will check the available classic chart patterns in PFOREX Assist and trading examples of classic chart patterns. The patterns that we will review are as follows: double bottom, double top, flag, head and shoulders, pennant, triangle, and wedge. There are numerous classic chart patterns with different structures. While some of them are popular due to simple shape, some others are complicated that are hard to find on the chart price. The implemented classic patterns by PFOREX R&D team have the best performance among entire patterns to deliver the most reliable strategies for a higher success rate. The courses in education section include all required information that traders must know before trading by classic chart patterns. The classic chart patterns can be divided into two main categories: reversal and continuation. The provided strategies include both formats to meet all trading preferences. Now let's check the specification of classic chart pattern strategies. They are suitable for range and trend markets. They can be implemented on all symbols and all time frames. The entry price for buy order is the breaking spot on the neckline or a resistance line toward up. The entry price for sell order is the breaking spot on the neckline or support line toward bottom. The take profit price for buy order equals to the half of the height or the same as height of the pattern over entry price. The take profit price for sell order equals to the half of the height or the same as the height of the pattern below entry price. The stop loss price for buy order is below the head of head and shoulders, or below the value of double bottom, or below the last value of pennant, triangle, flag, and wedge. The stop loss price for sell order is over the head of head and shoulders, over the peak of double bottom, or over the last peak of pennant, triangle, flag, and wedge. The confirmations for reversal patterns are divergence or convergence, stochastic and RSI, and overbought and oversold conditions. The confirmations for continuation patterns are special candles with hidden divergence. Now we will check some examples of each pattern. Double bottom pattern. After a long downward trend, a double bottom pattern has formed in which the neckline is a horizontal line on the peak between two valleys. In case that price crosses the neckline toward top, then this signal becomes active. The height of this pattern is a vertical space between the peak and the deepest valley in this pattern. The top left info table determines the entry and exit prices as well as other major data. Traders can find helpful information regarding this pattern in education courses. Double top pattern. At the end of the bullish trend, a double top pattern is detected on Euro against Australian dollar symbol in H1 time frame. The entry is set just below the neckline, which is the horizontal line on the last valley. With help of other confirmations, traders can place a sell order after the price passes the entry price toward bottom. Further information regarding this pattern with more examples are available in education courses. Flag pattern. The first continuation pattern that we'll talk about is flag. This pattern has suitable ratio of reward to risk due to its structure and take profit to stop loss ratio. After a bearish trend, the price has oscillated inside a channel. It is speculated that after the price breaks the support line, it will fall until take profit prices. The support line is the line that connects the valley in this pattern. Head and shoulder pattern. On bullish trend, price has formed three waves in which the first one is left shoulder, while the second one is the head of this pattern. After price formed the right shoulder, a neckline is formed by connecting valleys in this pattern to determine the entry price. Due to upward slope of neckline, this pattern has better structure and higher strength. The signal will become active for trading if the price breaks out the neckline and passes the entry price. The other signal information are shown in the top left table. Penance pattern. This continuation pattern that is formed from shaft and triangle pattern. The ascending support line is formed by connecting the valleys, hence the pattern has good structure with higher success rate. The stop loss price is just over the last swing. After price breaks up the support line and passes the entry price, then this signal will become active. Triangle pattern. This pattern has three types: ascending, descending, and symmetrical. This continuation pattern is developed for higher performance and success rate by which the continuation signals will be generated. Due to the ratio of reward to risk, this pattern will provide reliable signals and analysis. The stop loss price is just below the last valley, while there are two take profit prices. The resistance line is formed by connecting the peaks of this pattern to specify the entry price. And finally, the Verge pattern. One of the best reversal pattern that forms at the end of trend to show the reversal spots. It is speculated that the price bounces back with sharp and fast movement. In this example, after bearish trend, a Verge pattern is formed by some downward oscillation. The resistance line is developed by connecting the peaks to specify the entry price. The stop loss is just below the last valley. For further information, you can find highly reliable trading courses in education section. These developed patterns on PFOREX Assist will be detected on all trading symbols and time frames. You can download PFOREX Assist app on App Store and Play Store to receive high-quality trading assist services. That concludes this session. Until next time, another session. Take care.